Hi, and welcome back to the Property Frontline podcast. Today, I'm talking to Laurence Barlow from Credit Reboot. Hi, Laurence. How are you going?
Hi, Deb. Thanks for having me.
Yeah.
Good to see you again.
Yeah, great to see you too. So let's just jump right in. Tell us a little bit about what you do at Credit Reboot.
Okay. Well, as the company name suggests, we reboot, restart, refresh people's credit challenges. So we're a debt management company. This is largely a new sector in Australia, and it's a sector that's come about obviously because of the amount of debt and other economic challenges that are in front of us. So how did we get into this business? Well, the joke in the company from my side is that I came from the dark side, debt collection, and then got out of that business. I had a very large number of debt collectors collecting for all of the major banks, telcos, and utilities around Australia. I think we had about 500 debt collectors. And for my sins in debt collection, when I got out of that business, cut it up and sold it off, I was thinking about what to do. So I developed an application that allows people to repair their credit file from a mobile phone. It's a very unique application, and one that was very popular. It was new and probably a bit complicated for most consumers. And what we found is that even though the file was getting cleaned, is that the debt was still there. So we had to get into debt management. So what we do now is we negotiate on behalf of people, not only to have their file cleaned, but we negotiate to wipe out or to write down either the debt, the interest rate, or both.
And do you then help people sort of stay on the straight and narrow? Is there, once you tidy people up, support with that?
Yeah, we do give people pathways or corridors, absolutely. The idea is to do the triage, get them out of the problem that they're in at the moment. A lot of our clients come in with, they do have a problem. They just simply can't see how they're going to meet, next month's bills. It's just, they're already working a few jobs, or maybe, they can't get enough hours. They've just got no idea how they're going to meet it. So we get them at that stage often. It'd be great to get people earlier than that, but I guess, people being people, they tend to wait. But if we get them earlier, it's a lot easier. And what we do is, if you sign up to the service, not everyone gets to become a customer. We need to make sure that you've got the right sorts of circumstances around you to be a client. So we go into the bank on a bona fide debt dispute. What that means is that somewhere between the cradle and the grave, there's been substantial errors in the bank's processing of the loan that's had a domino effect and rolled the client into real financial distress. So they're in financial distress specifically because of the non-compliant behaviour of the lender when giving the person the loan or collecting the debt.
Could it be the mortgage broker, not necessarily the bank, or does it?
Yeah, I mean, sure, it can be the broker. Look, banks, as all brokers know, banks have their own metrics. So, you put an application in, they need to ensure that the application is valid. So there's what they call the responsible lending. There's three primary criteria for responsible lending. I won't go through them. I'm sure everyone sort of has a sense of what it is. And the banks need to do that to validate the broker's forms. Now, do brokers get it wrong on occasions? And absolutely, but it sits with the bank largely.
What would be the next steps? So once people talk with you and they become clients, then what happens next?
Yeah, well, let me give you a couple of classic scenarios. So come on, and a very normal situation for us is someone who owns a home and an investment property. They've got a couple of credit cards and they're working. And a husband and wife working, maybe they've got a small family. Very, very common situation. They would, between them, have 100,000 in credit card debts across 4 or 5 cards. Not unusual. A lot of people, really? Yeah, but really not unusual at all. Certainly 50,000 in credit cards is very, very common. So I'll get to the mortgages in a minute, but what we do with the cards is that we have a look at how they've got those cards. Now, most people don't know this, but Australia has the second highest level of consumer debt on the planet. And that doesn't make a lot of sense when you look at our income averages. We're not in the top 10. We might be just peaking over the top 10, but Yeah, it's our debt level compared to our income is very, very high, second highest in the world. In fact, some economists, the first highest in the world. So how did that happen? Well, the joke is we've got a debt addiction. We've been sold far too much far too much debt by the banks.
Yeah.
And so our dealer is causing us problems. So what we do is that we get the documentation from the bank. If we determine that there is the basis of a debt dispute, and we do that through an interview, but we don't really want to study the paperwork the client has, because as we've learned over the years, the crime scene is with the lender. So we use the law to extract the documents from the credit provider, and then we run that through the application that we've developed, and it does thousands of checks using the National Credit Consumer Protection Act along with ACCC and some other regulators, and it determines if the problems that the individual has or the family has at the moment carrying debt is a result of the bank's behaviour. And if it is, it will then generate a range of legal letters with the breaches that the bank has committed over the process. And now we're talking about spelling mistakes or anything like that. We're talking about really big problem, in how the loan was approved. That letter goes off to the bank and says, look, if you're going to try and hold the client to 100% of this contract, that means you want it all paid back at this time with this rate and these fees, you're holding them to 100% of the compliance of the contract. And so it's fair and reasonable that you are held to those same standards. And we can see from this document that you've breached all these things that you should have done that you didn't do. So we cut a deal. So from there, we negotiate.
And then map out a pathway to get people to their end goal in a reasonable manner. Is that what happens?
Yeah, absolutely. So there's a range of things that can occur. We can negotiate, legally negotiate a moratorium for them. They may not need to go into hardship for that moratorium, particularly if the bank was the instigator of the hardship. So there's other arrangements that we can come to. We can protect their credit file. It's important, of course, when you're trying to get yourself out of a debt hole that you don't end up with a credit file that looks like Swiss cheese at the end of it. So you've got to come out with a nice clean file. So that's the other thing that we work on. So we look after personal loans and credit cards, which is what we do most days. We then have a range of clients that have got mortgages. Sometimes there's been mining houses that have been sold and they've got a couple of $100,000 in negative equity that they've got to carry. We do some very interesting things with our applications to determine if those loans were compliant, work out how the lender has moved the numbers around and potentially position the consumer in a place they shouldn't be. And then we go back to them with that evidence and say, well, we need to make an adjustment either to the debt, the rate, or both.
Well, that sounds great. And of course, I guess things are made worse by the incredible rate of interest rate hikes we've seen over the last 12 months. So you're seeing more people in hardship.
Yeah, never 12 interest rate rises in a row, I think. I'm sure after the Reserve Bank governor gets out of this job, he's going to be joining Economists Anonymous. So he'll be a recovering economist. It's just a mess over there at the moment. I'm just shake my head. I just can't believe it. But we are where we are, and I think the most important thing is to look very carefully at what's happening with your credit file. What sort of a buffer you've got on your saving your rate, and how you can manage that. So if you have been placed into a debt position and you're wondering whether it was compliant, whether it was it went through and arguably maybe it shouldn't have gone through, and how did you end up with that much debt anyway, that's a service that we can do. So we can determine pretty quickly whether you fall into that kind of category. You can do that without taking a debt dispute on. So if you'd like to understand where the challenges are in your loan and potentially how you can negotiate, then we can have a chat with you about that, and we can provide you a report that will show you where the breaches are in your loan specific to you in accordance with the National Credit Consumer Protection Act. You can use that document to negotiate a reduction in the rates, a freeze on the rates, not capitalised. And then in most cases, certainly in the case of credit cards and personal loans, we always negotiate a reduced settlement. So from 100 grand, it's not unusual to write off 50,000. So to take you down to 50,000. And it's always the case, if they can't pay the balance out, they in a lump sum, they'll be able to pay it down with no interest on it. So that you're not ending up with one of those zombie credit cards that just keep going and going and you can't kill them off, right? So you just pay the balance down and we look after your file on the way through. That's a great way to improve your cash flow position, and an intelligent way to go about. A lot of people think about debt consolidation, getting more debt to put out existing debt. This is kerosene on the fire. Not a good idea. Sometimes there's reasons to do that. But certainly, if you're in a property development and you need something in bridging and mezzanine, there are reasons to do those sorts of things. But in most people's cases, they haven't put their mind to, look, I got into this debt. I'm not really sure how I got here. They just kept throwing cards and loans at me. And I'm here, but really, should I be here? So if they have overstepped the regulations, if they've overstepped compliance and put you in a position of hardship, you've got the right to go back and negotiate an outcome. We can help you with that.
Yeah, that sounds great. I was talking to someone the other day. I didn't realise that the banks aren't allowed to send you those letters saying you can increase your credit card limit. You know how they used to send those out all the time, or
I get those calls mainly from
Sorry, go on.
Mainly I used to get those calls all the time. Our friends at Citibank would ring up and go, Mr. Barlow, you've been pre-approved another $20,000 on your credit card, and if you take it today, we'll give you a free bottle of wine. So what they're doing is they're just selling money, and that is illegal. That's called unsolicited credit card increases, and it is illegal. And if that has happened to you, and I know it's happened to lots of people, that's the basis of a conversation to reduce that debt. That should not have happened. What you will find also, we've got many cases where someone has 4 credit cards from the same organization, but it looks like they've got different debt. So for example, they could have a Qantas card, they might have a Coles card, they might have an NAB card, and they might have a Citi card. And that's all the same dog food, but in a different can. And the credit department's all the same credit department. So Bank of Queensland credit cards, it's also Citi as well. NAB have just bought Citi's book of debt in Australia about 6 months or 12 months ago. Citibank have been put back to the United States. They've been told to move out of retail banking in Asia Pacific. And the joke is because they lend money to unborn children and dead dogs. So they've been chased out of Singapore, and they also New Zealand, Australia, India, Asia Pacific. So they're back doing institutional lending in America. And although their brand is still here, it's not them. It's now picking up their leftover debt and servicing it from there. So the point I was making is that there are often there are often real breaches in how cards and personal loans and credit cards have been given to you. If you are just, I can't believe I'm carrying this much debt. And frankly, from our side, I'm astonished at how many cards are handed out. So where I was going before is that often you'll see someone with multiple cards. They'll all be the same credit department at the back end, and that's the way they navigate this unsolicited credit card increases. So once where you would see, I don't know, $50,000 on a credit card, which you still do see, but it's more common to see someone that's got 4 or 5 cards at $7,000 or $8,000 a card, all with the same lender. Maybe different brands, but all the same lender. And that's the way they get around it. That's also, I can tell you on the face of it, there's also going to be dozens of compliance breaches in how those loans were given out. And we can negotiate that down.
Wow. But if people get those letters these days, they can confidently say, well, that is illegal. So
absolutely.
Yeah. Okay.
Yeah.
Alrighty.
Absolutely.
And so So have you got some new approach that you're just about to launch? Can you tell
Some
me a little
tips.
bit about that?
Yeah, tips and tricks. We've got as I alluded to earlier, we developed a do-it-yourself credit repair application. Now, we took it, the debt's still there, even if you get your credit repaired. Most people don't know this, but your credit listing or what's on your credit file in many ways is not affected by if you pay or don't pay out a debt. So if you have a black mark on your credit file and you pay it out, the credit default is still there. It's simply the status of it is upgraded to paid or something like that. The problem with that is that, to use this analogy, is, you've done time and you've got the record and it's there for everyone to see for the next 5 years, even if you pay it out. So that means the lender will definitely increase your rate. And that is a great device they use. They actually don't want the default gone. They're happy to lend you the money if you pay it back. And it's a great way for them to add more margin to the loan, because they go, oh, you had a default, you're higher risk, we'll better increase the margin. So it's a good way for them to get more commission. What we do, and once again, for my sins in debt collection, we learned this, is that the compliance associated with marking someone's file is not always, in fact, often it's not followed in the way that it should be followed. And so our application does a range of checks on the default notices that the client received coming up to the default and how it was marked on the file. Once we identify errors on how the bank has gone about black marking the consumer, we let them know about the errors and they need to be removed. And that's the way that we work at it from a technical perspective. We don't work at it from I've got a mate and we had a beer and he's going to look after you. It's not that at all. It's all very, it's all very compliant and all very in the box. So with that, and it's very processed. So with that, we've developed a do-it-yourself credit repair application. It's very good because it not only gets rid of credit defaults or black marks, as they're commonly referred to, is that it will also get rid of payday inquiries on your file. So we see this is another insider joke. We often see this where, someone's been shopping around for the best rate on a credit card at 1 o'clock in the morning, trying to pull focus through the end of a glass of Chardonnay. And they're applying for different credit cards to get the best deal, which we're told to do. And then they end up with 6 or 7 inquiries on their credit file. Each one of those inquiries will drive the credit score down somewhere between 50 and 100 points.
Wow.
And we're unknown. It's largely unknown. And so there's ways to shop for credit cards, but putting applications in for lots of them is not a smart way of doing that. If you've done it and you've ended up with a bad score, or you've ended up with another thing people don't know is that many mainstream lenders will see a credit inquiry with a payday lender like a Zip or an Afterpay. They will see that as a black mark. They'll immediately say, no, that's you're not getting the loan. And that's an internal policy with a number of lenders, but it is a real thing. So if you've got payday lenders in your credit inquiry, this application will get rid of those as well. We do it in a legal and technical way. I won't get into it at the moment, but nowhere in the privacy statement that you sign, when you go for a loan application, you've got to sign that privacy thing. Nowhere in most privacy, some do, but almost all of them don't, say, by signing this, you're going to hurt your credit score somewhere between 50 and 100 points. They don't tell you that. And because they don't give you the meaning behind what you're actually doing, there's a basis of removing those inquiries, because they haven't told you about the detriment that you're going to get. Your credit worth is going down, your interest rates go up. So we've got a DIY for that. Other one that we're developing, it's a couple of weeks out from release, which is very exciting, is a do-it-yourself debt management tool for credit cards and personal loans that will get you a reduced interest rate if used correctly. It can suspend your payments without capitalizing the interest if used correctly. And it will also, put a cover over your, or put a wall between the credit provider and your credit file, so stopping them from marking that. And that's due to be published in the first week of August or the last week of July. We're just trying to pick the date. And so, yeah, everyone who believes that they may have a problem through compliance breaches on their loan, and you can look at your contract all day long and have no idea where the errors are, because it's convoluted, a lot of fine print and lots of laws and things like that. We tell you, you can have a look at it, work out what your circumstances are, and then you can go and negotiate. And you will find that lenders are very much open to negotiations these days. In fact, we were talking off camera before about I'm seeing many more people in the credit departments, the debt collection side, in lenders than we are actually in customer service at the front end.
Yeah, sign of the times.
It's extraordinary. It's like it's the biggest part for employment in the bank is in the debt collection side, or customer care, as they have named it.
Yeah, you wonder how long it'll be before they flip back to the other side, because how are they making money at the moment? But I guess they're living high on the their interest rate increases. All right. Oh, sorry, go on.
Yeah, no, I mean, we do forget that the Australian banking sector is the most profitable sector in the world in banking. I think that statistic's right. It certainly was about this time last year. So it is, it's a very, very profitable sector. Our bankers are not living on beans and toast as much as they'd like to tell you. It's hard times. We do have a very profitable banking sector.
Yeah. Well, I guess that's one shining light. And so if people want more information, where can they get it?
We've got a range of educational stuff and case studies on the website. So you can go to creditreboot.com.au and have a look around there. There's some tools and downloads. The do-it-yourself applications will be out, as I said, last week of July, first week of August. I think that'll help, Deb.
All righty. That sounds great. All right. Well, thanks very much for taking the time, Laurence, and we'll look forward to talking again soon.
Okay. Thanks a lot, Deb. Thanks for having me. You have a wonderful day.
Yeah, you too.
See you later. Bye.